Well, first off, Morgan Stanley on very interesting on BHEL. They've maintained their target price 220 odd. They maintain their rating of equal weight. It's almost a 30% downside to current market price. BHEL came out with numbers, execution on slightly on the weaker side, and therefore the numbers were weaker than most estimates were looking. In terms of key observations from Morgan Stanley, first off, cash flow from operations negative, but that's largely because of net negative working capital. Again, receivables being the pressure point where cash flows was concerned. They've won orders, of course, 78,000 crore worth of orders in FY24, and their order book now at 1.32 lakh crore. 10 gigawatts of more orders expected in FY25 as well. So the order pipeline decent. But the key point now is going to be on execution. So risks to upside from here. One, a sharp contraction in receivables, stronger free cash flow could prove to be positive. Stronger ordering, better demand, self-sufficiency, that's another point where Morgan Stanley believes there could be upside. Faster adoption of new environmental norms, of course, government intervention required there, or Supreme Court intervention for that matter. Positive control on fixed cost could obviously pose another positive, and a reduced adoption in renewables could also be a positive for BHEL. Risk to the downside though, because target price is 220, increase in working capital, as well as sluggish order demand, as well as a faster adoption of renewables. Some of these factors could play negatively, of course, currently 5% lower in pre-open. Let me though quickly switch over. Hitachi Energy, very strong set of numbers. Double-digit margin guidance expected was in Q4 of FY25. It's come in already Q4 of FY24, and therefore the margin recovery has kicked in. They've clocked 10+% margins, a 15% margin product, which is the HVDC. Expected order wins from that in FY25 and 26 expected to be in the range of 4,000 to 4,500 crore. That could be a key positive going forward. They've revised their EPS estimates. This is Nuvama. They've in fact doubled the target price, first off, for context, from 6,500 to 13,000. That's what's got this note on my radar at least. And what they've therefore done is they've valued Hitachi Energy at 60 times EPS versus the 48 times earlier. They've also hiked their estimates 5% lower on FY25 versus FY24, but on that base a 60% growth expected on EPS in FY26, and the 60 times is what they've valued Hitachi Energy at.
So, well, to reach a target